Hey, Timothy, I'm so glad to have a chance to come to your office and talk to you. About 2 weeks ago, you and Benson came to our office, KWE, and introduced us a very cool product. And I just wanted to follow up with that and talk to you more about it.
Yeah, it's the no-income loan program, and it's really the kind of loan that you need if you don't qualify for traditional financing. There's so many people out there right now that they make money, they have the down payment, they have the credit score, but because the guidelines are so strict, Caleb, that they don't qualify for the traditional financing that really 95% of home buyers out there qualify for. Now, there's so many of us who are business owners, investors, real estate investors, and they just on paper it doesn't look that pretty, but they live in a nice rental condo, right? You've met those kinds of people before, right?
Yeah. I think you strike the keyword here, qualify. Right? I mean, nowadays, when people go out to buy either your home, your income properties, the first thing you need to do is to get pre-approval. Right? This is a given. Now, there is some hurdle about getting the pre-approval. Number one is there are a lot of questions, a lot of hoops for people to jump through. And number two, they don't know whether they qualify or not. I mean, they think about, hey, what about the DTI, the debt to income ratio? I think the highest you can get is 43%, right? And lastly, is that people don't like to disclose their financials, right?
Yeah.
And so, buyers or investors, they're facing these challenges. And so when I heard the program that you introduced, I thought, hey, this is something cool. Maybe, that can help a lot of homeowners still standing on the sideline thinking about it.
Yeah, that's true. Even a lot of the customers I have, some of them, their situation is so complicated, they actually rather just go with a no-income loan because they're so busy. They rather just go with the easy route. And this program works for them and everybody else in between as well.
Okay. Yeah. So during your presentation, one of the slides I really like, it is waiting is not the answer. Let me just read it off.
Sure.
While home prices are rising, rent is rising too. Saving up is not the answer. Can your buyer save up faster than homes appreciate? The best thing you can do for your buyer is help them buy now so that they can begin to take advantage of the appreciation moving forward. By the time rates come back down, they will be in a good position to refinance to get the best of both worlds. And I think this is very true. And so instead of standing in the sideline, there is something that can help buyers to move forward with it.
Right. Don't wait around to qualify for traditional financing, because if you can qualify with a no-income loan that we'll explain in a little bit, it's better to buy now so you can run with the appreciation rather than trying to save and wait and try to beat the appreciation, because it's very unlikely that any individual can actually outpace appreciation. You might as always, the time to buy is almost always now, every time I look at 99% of my buyer scenarios.
Yeah. Okay, well, maybe you can go in a little bit deeper about this no-income loan, as to how you can help buyers or investors.
Okay, so the no-income loan is actually a community loan backed by the U.S. Treasury. What I mean by that is that it's a loan where if you have enough down payment, you qualify. If you have, the minimum needed, Caleb, is 20% down, but ideally you want 25, 30% down sometimes. But 20% down is all you need to qualify for the no-income loan. There's a little bit of reserves as needed. If you have good credit, it's almost negligible. If you have below average credit, I would say it's about 6 to 12 months in reserves. So depending on your purchase price or loan amount, talk to your loan officer about that. And that's when we fill out the loan application, we literally leave the income and the employment section blank.
Okay, well, I take your word I don't know about face value, but is it that good? You don't need to do employment verification, income verification. You skip all those.
That's right. You skip all of that.
Okay.
Yeah.
Okay.
For a loan like this, right? It sounds already too good to be true, but that's because for a program like this, the rate is a little higher.
Okay.
Than a traditional loan, right? That makes sense, right? You have a no doc loan.
Right.
You have to be proportional to the risk. And really, the community lending has really kind of figured that out.
Okay.
Yeah, so rates are a little higher than your alt doc loans, and then they're even higher, of course, than the full doc loans.
Okay. Okay, that's understandable. And the thing is I think this is like a tool. I mean, some people may call it a bridge loan as well, because you are not going to go in and just amortize it for 30 years and you stay with the loan for the rest of the term. You probably want to refinance it.
That's absolutely correct. We call it a bridge loan in the sense that it's the bridge to getting the home sooner than later. So it can be a 30-year fixed loan. It can even be 40 years, by the way, sometimes. If you choose to do a 30-year fixed, don't expect to hold this for very long. The 30-year fixed is just there as a matter of courtesy, convenience, and we amortize the payment over 30 years to keep the payment low.
Okay.
But you're going to end up refinancing within a year, maybe 2 years. That's why it's for borrowers who are trying to either get something together, establish, maybe you need to file one more tax return. Maybe your business on paper for this year, because of the pandemic, doesn't look so pretty. Next year, you know it's going to look great. So in the meantime, you don't want to compromise the timing. You buy now, you refinance a year from now or 2 years from now.
Okay, great. Now, here comes to the reality. I have a buyer.
Yeah.
How this loan can help my buyer to win the offer, to win the contract?
Well, let me ask you this. Out of all of the transactions that you have done, Caleb, I know you've done, you do a lot, okay? How many of those let's say you're representing the buyer, how many of those do the sellers really try to nitpick the ones that close faster?
Most of them, like 90%. Yeah.
90% of them, that's a lot.
Yeah.
So how many days is a traditional real estate transaction? How many days in escrow?
We want to put down 30 days just to give a more cushion.
Okay.
For different things.
So how about what if you heard that this one can close in 21 days tops? At the most 21 days. Most of the time it closes 15 to 18 days or so, depending on how quickly the appraisal comes back. But this one, with an offer, with this type of loan, a no-income loan, because there's so little work involved, you can offer 21 days and stand by it without any stress.
Okay. Wow. Now, how about the pre-approval state? Do you need to take long time before he can get it pre-approved, the buyer?
I would say just a few hours of work.
Okay.
For us to pre-approve.
Wow.
If I have all the documents, it would just take me a few hours to put everything together. Yeah, and then you can start making offers, 21-day closes in no time.
Hey Timothy, I don't want to keep the video too long. Okay. So I think what I got today is that if you have a decent amount of down payment, decent credit score, you are ready to go, right? And then all they need to do is just to call you up. Any concluding thought?
Pretty much if you have 20% down and decent credit, you're halfway there already. Come see me, come talk to me. My contact information is in the description below, and we'll do a 15-minute quick initial call, which will eventually lead to a 30-minute loan consultation where I'll go over your max purchase price, your monthly payment, and the total amount of cash you need for the entire transaction from A to Z. Caleb is really the best realtor to go with on something like this. I learned so much from you, Caleb. I really appreciate all the knowledge that you bring to this too. So thank you.
Thank you, Timothy. Okay. See you guys next time.
All right. See you guys.